Today, grade 10s, today we are going to go through the expense adjustments, which is your expenses payable, expenses that you still have to pay, and then also prepaid expenses, which means expenses that you, the business, has paid in advance. So let's go through this. According to the matching principle, all expenses for the financial year must be brought into the account during the current financial period, even if this expense has not yet been paid. For example, if the telephone account has not been paid for the last month of the financial period, this amount becomes an expense payable. A journal entry for that amount owing for 1 month must be made. The amount owing is recorded in the recorded in the expenses payable account or accrued expenses account, as this amount is owing by the business. The expenses payable account is classified as a liability. Expenses payable is a liability because it's money that is not yours. You need to pay that to your suppliers. This is an amount. This amount is owing by the business. As this amount is owing by the business, expenses payable account is classified as a liability and the expense account increases by the amount owing. Assume that the total paid in respect of telephone amounts to 15,100. The account for February has not yet been paid, 1,200. This can be illustrated as follows. Alright, so again, grade 10s, you need to understand that expenses payable is an expense that you are still owing in your current financial period. Alright, so even though you have not paid it, you still need to account for it as though you would have paid for that. Alright, so let's go, and it's according to the matching principle. So everything that belongs in my current financial period needs to be in that period, and anything that is not belonging in that current financial period should be taken out. Alright, so let's go through the example. On the 28th of Feb 20.2, the following appeared in the pre-adjustment trial balance of Aztec Stores. Water and electricity 14,500 and the repairs 4,000. Now we have adjustments. The February 20.2 water and electricity account 1,230 has not yet been paid. An account for repairs 500 is still outstanding. So how are we going to do this? Again, remember that expenses payable is a liability, and what do we do with liabilities? We put liabilities on the credit side. Alright, water and electricity is an expense to the business, which is why it is debited. So is repairs, and we will debit that as well. So we need to figure out the account credit. Remember, because this has not yet been paid as yet, guys, it is a liability to the company. So I'm going to take 1,230 and I'm adding the 500 to get the total of my expenses payable for my current financial period, and that gives me a total of 1,730. How will be displayed in our ledger accounts? Remember, 2 sections in your ledger accounts: balance sheet, which is concerned with assets, owner's equity, which is capital and drawings, and liabilities, and your nominal account section, which is concerned with your incomes and your expenses. So yes, we have established that we do have expenses payable, expenses that we have not paid for the current financial period, and it is a liability account, and it increases on your credit side. So yes, water and electricity was 1, and I put down the amount there, 1,230, as well as repairs, and I put down the amount. Moving along to our nominal account section, water and electricity, we had a total brought forward of 14,500, and I have to put down what I have not paid. And again, water and electricity is an expense, so you're putting it down as on the debit side, but your details will be expenses payable or accrued expenses. It's one in the same thing. Very same for repairs. You had a total brought forward of 4,000 and you did not yet pay repairs. Well, it's still outstanding. Expenses payable 500 Rand. How will you display it in your accounting equation? Expenses is owner's equity and expenses payable is liability. So your owner's equity and liabilities will be affected. Remember, expenses decrease owner's equity, so you're putting minus 130 at owner's equity for your water and electricity, and your liability has increased by 1,230 because it has not yet been paid. Very same for your repairs. It's that simple. Moving along, prepaid expenses. This is when you, the business, have paid your expenses in advance. You paid expenses for the next financial period. So let's have a read. Any expenses paid in the current accounting period but which concerns the next accounting period is called prepaid expense. According to the matching principle, only expenses for a financial year must be brought into account during the current financial period. Any expense for the next financial year is treated as prepaid expense and is shown as an asset in the financial statements. For example, if the insurance premium has been paid for the next financial year, this amount becomes a prepaid expense. A journal entry for the amount must be paid in advance must be made. The amount is recorded as prepaid expenses as this amount has been paid in advance and relates to the next accounting period. The prepaid expense is classified as an asset. Okay. And the expense account decreases. Assume that the monthly amount paid in respect of insurance is 3,000. The premium for the first month of the financial year has been in the current accounting period. This can be illustrated as follows. Okay, so let's go through our example that we have over here. They told us that our balances for insurance is 23,200 and our rates is 14,500. Now they say that the insurance amount includes an annual premium contract for 4,000 and the period it was taken out was from the 1st of September 20.1 to the 31st of August 20.2. So this is where timelines become important. Great teams. Okay, let me take that out. Your financial year end is on the 28th of Feb 20.2. Alright. When did your year start? It would be the 1st of March 20.1. So this was the duration of your current financial period that we have over here. So this adjustment is saying that we have taken out insurance on the 1st of September and it will expire the 31st of August 20.2. Okay, let me just bring this a bit closer. That's your year end. Anything that flows into, well, after the 28th of February is out of your financial period. Alright, so we took out this insurance premium the 1st of September. Okay, I'm going to put there September. And it expires in August Alright, yes, the 31st of August. When does your financial year end in Feb? So how many months have been prepaid in advance? So let's see. August, September, October, November, December, January, February, year end. March, April, May, June, July, August. So of this, the insurance expense that fell within this period was in our current financial year. The insurance payment that fell within this section was in your next financial year. This amount would be your prepaid expenses, and that's the amount that I'm looking for. So now you need to work out how much your insurance costs you per month. So they say that this insurance was 4,000 Rand. Okay, you're gonna divide it by the number of months that you have paid. So let's count the months. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So divided by 12. $333. Are we right? Okay, so 4,000 divided by 12, and we get this value. Alright, so that is your per month. How much do we pay for insurance per month? 333.33 cents. Now that you have your insurance that you would have paid per month, you're then gonna multiply it by the number of months that was prepaid. So that is times 6. 1, 2, 3, 4, 5, 6. So let's go back to our calculator. Answer times 6. 2,000 Rand has been prepaid for insurance. Okay. And there is the answer. Your journal entry, prepaid expenses. It's an asset, which is why it is debited. Insurance we worked out to be 2,000, and they have given us the prepaid expense on our right, which is 2,500. It's on the credit side because it has been prepaid. It's not an expense in this financial year as yet. However, we will record it as an asset, and the account we're using is prepaid expense. So 2,000 plus 2,500 gives us 4,500. Remember, prepaid expense is an asset. What do I do with assets? I debit assets. Insurance 2,000, rates 2,500. We take it to our nominal account section. We had a total brought forward of 23,200 Rand. Alright, this is an expense for the year, but of that expense, 2,400 has not yet been paid, which is why we put it on the credit side. It has not yet been paid, and it does not fall in your financial year. The very same with rates. Total brought down on your debit side, and the expense that was paid, prepaid, will be taken to the credit side because it is not in your financial year. How will it be shown in your accounting equation? It will be plus 2,000 at owner's equity plus 2,500. It will be displayed as a positive until we in our next financial year, where this will be reversed into a minus. And then remember, assets increases. All right, thank you, grade 10s.